Systems assist success. I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to this ESS BIZTOOLS podcast, where today I want to discuss the utilisation of systems by accountants, bookkeepers and business advisors to assist SMEs to run businesses that survive and hopefully thrive during 2025. Smart Company reported a week or so ago that 91% of business owners that they had surveyed said that growth is their main challenge. I think we can all appreciate that in 2025. To achieve growth, SMEs need assistance from people who can assist them to implement systems, analyse the results of those systems, report to them quite regularly throughout the year, preferably monthly, where a full analysis is undertaken of the results of their endeavours. Those people who can offer that service, I honestly believe, are accountants in public practice, bookkeepers who are wishing to be involved in those sorts of services, and business advisors. The development of systems for business operators is a key function of that group of people, well and truly beyond the preparation of the taxation return, which is part of the process, but only a small part of it. Because the key is to help your clients to survive. So within ESS BIZTOOLS, we have introduced a range of advisory services, including financial, commercial, and management accounting systems to assist your clients to survive. So the Systems Assist Success program is for SMEs. There's obviously great benefits for SMEs. There's also benefits, though, for accountants, bookkeepers and business advisors, and for the professional firms' team members. Over a 4-week February, from the 20th of February, we are going to present 4 webinars, which will feature 20 of the key systems. And there's another 25 key systems within ESS BIZTOOLS, but we've selected 20 to feature over those 4 webinars a week apart, so that you can have a good understanding of the approach that we are taking to assist accountants, bookkeepers, business advisors to implement fantastic business systems to assist your clients to survive and thrive in 2025. And this will differentiate your SME clients, and it will certainly differentiate your professional firm. The benefits for SMEs is they will have a better chance of surviving in this difficult environment that they're operating in, and that they'll be very appreciative to their accountants. The professional firms providing these services will enhance your business operations, because you'll be rewarded by the generation of diversified professional service activities, which will create additional revenue streams within your professional firms. And the other huge benefit is for your team members, because they will be undertaking interesting and challenging work, because that's what it's involved in financial, commercial, business management activities with your clients. This will help professional firms overcome the challenges that firms all over Australia are telling me that you've all got, and that is talent attraction and talent retention. Because people are looking for variety in their work. They're looking to see some real outcomes from their activities. So we've looked at all of that as part of the ESS BIZTOOLS system, which we've made available for you to be able to use. Now, at the beginning, systems within a professional accounting, bookkeeping, business advisory firm start with culture. You must recruit the right people who are keen to be a key contributor. Honestly, if they only want to do taxation work, that's great. Just have them in the taxation team, but not in the advisory services component of your workforce, because they need to have an enthusiasm for undertaking this work. They need to have a flair for this activity. And the next part of culture is the onboarding of that person, making them feel welcome, training them in how your system approaches this task of delivering a wide range of advisory services to your SME clients. And the key aspect of the onboarding process is the business advisory services training. Within ESS BIZTOOLS, we have a full package that we have prepared, modules to guide you through the process of welcoming people to your organization. And it starts with getting organized. This is a discussion on the differences between providing taxation services, which is also very important, of course, as compared to the broader requirements of offering financial, commercial, and management accounting services to SMEs. There's a need for your team members to understand the difference. And then we go to offering advisory services. Where do you start? We have a great document, which is the SME needs analysis, which was originally developed in its original format by the Financial Management Research Centre at the University of New England 40 years ago, in a project that was jointly led by Andrew Geddes, an Australian accounting guru. And with Andrew's permission, we have modified the SME needs analysis over the years. ESS BIZTOOLS has been operating for 25 years, and we've produced a few new versions of the SME needs analysis. And what this gives you is some discussion points to sit down and talk to your client. Why, you might ask me, why would we do this? Well, the real issue is that most of your SME clients have dealt with you for years in only one aspect of their affairs, and that's their taxation return. Now, to be very blunt about it, they make sure they see you every year for their taxation return because they know this is an obligation imposed on them by Australian laws. But it doesn't help them run their business. It doesn't help them undertake anything. So the SME needs analysis is to assist them to understand that you, as the accountant, are able to supply a wide range of services to. But you need to have those conversations. And then we go into team training for the delivery of advisory services. The program we've produced includes role play and subtle examples of your team members' understanding of the wider commercial world, understanding benchmarking, understanding the various differences that occur. A number of our clients are trying to specialize in particular industries so that they really are accepted as experts, whether it's the wool industry or the beef industry or cotton growing industries or tradies, as some of our clients have. One of our clients has got 110 tradie clients that he's offering a full accounting service to. And then we go into leadership training, because the key then is to identify people who can become systems champions in various aspects of the products which are on offer, so that they're able to talk to your clients. We then move into business evaluation to understand that business needs to be analysed so that you understand it 1 inch wide but a mile deep. Why? Well, if you're going to be acting as a virtual chief financial officer or something very similar, you need to know a lot more about how the client's business operates. You need to know that there are appropriate internal control systems throughout the organisation. You need to understand who's got authority to do what. Are there systems manuals? Are there processes? Is there team training? So that you understand 1 inch wide but a mile deep. Now, in most cases, you will need to know more about your client than what you currently know from having prepared their taxation return. And I know that from my own experience. I was the senior partner of an accounting firm, but I had prior to that been the chief financial officer and company secretary of a listed public company. And I knew a lot more information about what happened in the public company and the various subsidiary companies we had all over Australia than what I learnt as a senior partner in an accounting firm. Basically, as long as we got the information we needed for the tax return, we were happy. But I really didn't look at internal controls if I was supposed to. I'm sorry. Apologise to those clients, previous clients, because I didn't. It wasn't part of the brief. We were there to prepare an annual set of accounts and a tax returns. So the debtors' days outstanding is another crucial point. Now, a few years ago, I had reason to talk to an accountant about the debtors' days outstanding of one of his clients, because at a seminar that I was presenting, the office manager of one of his clients had asked me what their debtors' days outstanding should be. And when I calculated it for her, it was 102 days. And she must have seen my face. And she said, "Is that high?" I said, "Oh, yeah, very high." I said, "Hasn't your accountant talked to you about this?" And she said, "No, he never says anything about any of those things. Doesn't he talk to you about debtors?" The debtors were enormous. As you can imagine, 102 days, turnover $8 million, this business. And I knew that accountant, and I happened to run into him about 3 weeks later in another city. And I said, "I was been talking to so-and-so." He said, "Yeah, I heard that." I said, "You ever look at their debtors?" He said, "Oh, I know the figures in the balance sheet." But I said, "Have you analysed it and talked to them about that? Do you know the debtors' days outstanding was 102 days? And he said, "Oh, was it?" I think that really illustrated the issue. That gentleman was a very good accountant in preparing tax returns. But that was his brief. He was there to prepare the tax return. And in that regard, as far as I know, he did a great job for his client. But was that helping the client in their business? I don't think so. I think they needed to have an alarm bell being rung by the accountant saying, "Hey, your debtors' days outstanding is very high. I can come in and help you reduce that debtors' days outstanding." Now, in all honesty, that's what I, through my consultancy business, then did with that client, because they rang me and said, "Well, what are we going to do about this? So-and-so doesn't seem to be interested." So-and-so was the accountant. I said, "Well, we can do it for you. I will send him a professional letter out of courtesy to tell him I'm going to analyse your debtors." And he wrote back and said, in effect, go your hardest. So over a few months, we got it back down to about 55 days. Still too high, but far better than 102 days. I hope this is illustrating the need for knowing your clients 1 inch wide but a mile deep, and then looking at how you can assist them. So the next project after we've done that is to move into a business plan. Every business needs a business plan, and it should be reviewed or prepared every 12 months. And I think you should be insisting on that. If businesses are coming, people are coming to you wanting to start businesses in 2025, I wouldn't act for them unless they agree that you are going to coordinate the preparation of a business plan. But you must make sure that your client and whatever their leadership team is, are involved in that process, because they've got to implement it. And if they're not involved, they will have no ownership of it. So it may as well just stay in the bottom drawer, but probably it's better not to even start it. So get them involved, sit them down, set up some sessions, 2 to 3 hours maximum, I think, and have a break every hour, because a lot of these people are not used to sitting down, concentrating on business issues like we as accountants do, and get their input. So the business plan's vital. And within ESS BizTools, we've got agendas for how do you go about preparing business plan systems. And then we move into predictive accounting reports, budgets, key drivers, cash flow forecasts, projected balance sheets. This is the financial interpretation of the business plan. Very important. And then you're ready to move into what I think is the key item. We've done the preparation. We've done the business evaluation to understand the business. We've done business planning. We've done the predictive accounting reports. We're now round to implementation, and that is the 52-week business enhancement system. Now, the key components of this are, first of all, daily. What happens daily? I'm not necessarily meaning that you, as the accountant performing a CFO role, are going to be there every day, but you need to have set up a system to ensure that some key data is available every day. Now, it might be the sales yesterday, it might be the average sale price achieved, it might be the bank balance, the debtors balance, key payments to be made this week. A 1 to 2 page report. In some industries, it will be the yield, the production yields are very important for management to see. And then we move into the weekly reports. A weekly profitability and analysis report is very important, because what it requires is your input and assistance in setting up the systems and reviewing those documents, but an immediate review as to how the business performed. Now, if there was an expectation that the gross profit percentage would be, say, 38%, and this week all that's been achieved is 22%, there needs to be a review. Now, very quickly, the reason for the variance might be found. It might have been that a special product that was ordered, that was then promoted, had not arrived, so we still had high-cost product going into the business. There could have been an error made in stock take calculations or something. There could have been some fraud, and we always need to be aware of that. But the main thing is, the main message that I want to convey to you is the absolute necessity of sorting out what that problem was as soon as possible, 1 or 2 days, so that it's fixed. Now, just think back as to what happens in most SME businesses. They don't even know that's occurred. They've traded for the week. They probably got their turnover, but there's been no financial analysis. Why? Because they haven't got an employed accountant. They haven't got an arrangement for a virtual CFO service at this stage. And in my experience, to make these systems work, it needs an accounting input. So nothing's done. So there was a problem this week. Now, that problem could continue for the rest of the weeks in the financial year. And there we are. How many months after the end of the financial year are you doing with your average business clients? 3, 4, 5 months, some cases 7 or 8 months, of course. And then you go to the client and say, oh, something went wrong last year. We thought you'd be up around 36 to 39% GP percentage. It's a key statistic. And you've only come in at 22, 23%. Didn't you know something was wrong? Oh, well, we had a bit of an inkling. We had a bit of a look, but no, we didn't know. We didn't really know it. No one pointed it out to us. I think this really highlights why we need weekly profitability and analysis reports being prepared, so that a problem is found and it's fixed, and it shouldn't occur again the following week. Now, the big end of town, a lot of them, do this every week. I mentioned before I was Chief Financial Officer in a public company. We were in the meat industry. We were Australia's second largest meat group at that stage. We had retail butcher shops. We had major meatworks producing meat mainly for export. We had small goods factories. We had a few other bits and pieces. And every one of them had a weekly performance report prepared, and it was analysed in the areas. We had about 13 different areas with an area manager and an accountant or an experienced bookkeeper, office manager person. And they would prepare the reports. Then the results would come through to head office, where I and a couple of my team members would analyse them. And I would then sit down with the CEO every Wednesday at lunchtime. And we would analyse the results. Now, I'd already sorted them. I had the 10 out of 500 odd firms, businesses, analysed, so that the CEO immediately said which are the ones that didn't perform the target, and he picked them up and he started talking to the area managers as to whether they had found the problem. What was it? Have they fixed it? That was the key thing. Have they fixed it? So that it's not going to be recurring again next week. Now, I'm not saying next week turned up and there were no problems. Unfortunately, that's not the way the world works. But that's what we did. Most of the meat industry did the same thing. But I subsequently found out Woolworths, Coles, IGA stores all undertake these weekly performance reports. You think about your client that's running, let's pick on butcher shops. Within the Woolworths complex, there's a butcher shop. Woolworths are running it. And maybe 50 or 60 metres outside, maybe in some centres closer than that, there's a privately owned butcher shop. Now, if he's your client, are you preparing weekly performance reports for him? Is he getting it? I don't think so in most cases. But the benefit that the Woolworths manager that's running that butcher shop's got is the general manager of that store has sat down with him on Monday afternoon or first thing Tuesday morning, gone through the results and said, good, it's great, or looked at them if there was a problem, and they've conducted a post-mortem to find out what went wrong. That's the way I believe we've got to be helping our clients deliver businesses, activities. And then we get the monthly financial accounts, which you've then got a profit and loss account for each business operation. You've got a comparison to the budget, which you've had back in the predictive accounting reports. And you can analyze it. And then you're in a situation where you can look at the overall results. And you can write a report, the finance report, which would go to the board of directors, board of advice if your client's got them. So that's the system. That's the 52-week cycle. So there's other activities that you could be assisting your client with. Things like their general approach to fiscal management, which is really highlighted by my comment about debtors' days outstanding. And if you haven't read it, please read the report that MYOB Chairman Paul Robson wrote a year ago now and was published in the Financial Review, based on a survey that MYOB conducted on 1,000 of their clients about the lack of understanding by many SMEs on debtor systems and on establishing accounts with key suppliers and when those accounts had to be paid. Fiscal management was identified as a huge problem. So when people are starting a business, they need proper briefing and advice, and make sure that the financial projections are based on the reality. And the realities were that they need to check with suppliers as to exactly what their payment terms were going to be. In the MYOB survey, apparently people starting off in business just automatically assumed they'd have 30-day credit, and obviously got a rude shock when they went to place orders and got told they had to pay up front, or they had to pay cash on delivery, or maybe cash after 7 days, or they got no more stock or whatever they were wanting to buy. So that quickly blew their cash flow forecasts that they prepared on a 30-day basis, payments. And another big problem, according to that review by MYOB, was that there was an assumption that all their debtors would pay them in 30 days. Australia's got arguably the highest debtors days outstanding in the world. We won a dubious international award a couple of years ago. The longest debtors days outstanding in the world. Yet these businesses had assumed that everyone they were going to give credit to was going to pay them in 30 days. So we need to be more upfront, I think, with people who are starting off businesses and saying, this is what we are going to do for you. And it is going to cost this. And if they say it's too much, well, you say, well, you haven't got enough money to go into business because these are the services you need. Otherwise, you just become a failure statistic. And it's going to cause problems to a lot of people. So going back to the moving through all this to get started, I think the big thing is we need a rhythm of meetings. And I think you should be talking to your clients about this. The daily meeting, very important. The stand-up huddle, if you like. 5-6 minutes. What went wrong yesterday? What's something that's just got to get done today? Now let's get out there and get it done. Now, some people have breakfast meetings. I don't think you need to be as formal as that. You have a meeting at a time that suits your team when the whole team's going to be working. And then there's, of course, weekly meetings. And the weekly performance reports require a review, of course, and that might involve the whole team because there's been a big problem. And monthly, there should be a meeting of the leadership team to consider the reports that have been prepared. In the webinars we're presenting with ESS BIZTOOLS, we're going to cover all the subjects that I've mentioned, and then we've got some others. We're going to look at businesses need firm foundations. So that's starting a business. So we're going to look at the characteristics, the legal structure, the weakness, the disciplines required to succeed in small business. Pardon me, we've all seen examples of bad discipline, haven't we? Successful business attitudes, how to avoid the pitfalls. Communication's a big problem. Within ESS BIZTOOLS, we've developed a weekly newsletter which we prepare, and the client, our subscriber, badge it with their name and contact details, and they send it out to their clients. We try to have 4 to 6 key articles each time. We try to vary them. One of the articles might be targeted at a startup business. Another one might be to someone contemplating they need to raise money, so capital raising comes into it. Another one might be featured on things like risk management type issues. And another one would be on the financial management areas, looking at key performance indicators and business metrics. And what the whole idea is to communicate to your clients that you're aware of all these things and you can help them. Because I go back to one of my opening comments. Many of your clients will think that all you want to do is taxation. So that's a general overview of what we have coming up that starts on the 20th of February at 10 a.m. AEST for 40 minutes, an overview of issues confronting businesses. If you've got any interest in hearing more about ESS BIZTOOLS, why not go to our website, www.essbiztools.com.au, and you can look at the products. If you would like to have a one-on-one Zoom meeting with me to discuss how I think ESS BIZTOOLS could assist your firm to introduce advisory services to help your SME clients, we're happy to have a complimentary 40-minute discussion with you, where you can tell me a bit about your firm and what your team capabilities, who your clients are, and I can then tell you which of the 4 main product packages that ESS BIZTOOLS has developed that I think suits your firm's position. You can send me an email, peter@essbiztools.com.au, and we will definitely get back to you and set up a date and a time for a complimentary Zoom meeting. So thank you very much for listening to this discussion. I look forward to hearing from you. Stay safe. Have a great day. Goodbye.